All right, we are recording. Hi, you guys. Thank you
Hi.
again. Like I just
Hello.
said, thanks for joining us. We've got Michael and Greg here from Fairway and Lisa and Steve from the Paragary Miller team out of Sotheby's. And like I was just telling you guys, part of why we do this, part of the mission of Real Producers is that we connect top realtors in our local market with top affiliate service industries, the best of the best really, and we deepen those connections a lot of the time by humanizing, showing kind of the human stories, pulling back the curtain. And one of the unique things about being in this shelter in place and doing a lot of business out of our homes is that there has been kind of that connecting level and getting to know each other on a different level and hearing each other's stories behind the scenes. So we're doing that here. Let's just start with introductions and we'll go around. Michael, we can start with you because you're at the top of my screen.
Okay, all right.
And just tell us a little bit about who you are, what you do, where you do it, how long you've done that for, and start there.
Okay, so Michael Pankow, been with Fairway now for coming up on a year, actually, April 23rd. Been in the mortgage industry associated with since 2001. I had a short stint for about 3 years at Vitech Mortgage, which Steve and I were talking about earlier. I was at the Sierra Oaks Lyon office there as an in-house affiliate. And then moved over to Big Valley Mortgage, where I ran that for 10 years, and then moved up to the corporate level, and then decided to take a break. Took a break, and was a great thing for me. I went out and did some stuff that's totally unrelated to the mortgage industry, which I really enjoyed. And then I decided to come back. Greg and I had worked previously together at Big Valley, and decided to come back in and join Fairway. I'm a father of 3. I've got a 21-year-old Marine. I've got a 15-year-old DO student who's living at my house permanently right now, eating everything I have in the house. And then I've got a 6-year-old little girl. And I work out of the Rockland office. I'm a patriot, as you can see. I'm a former military guy. I was in the service for 12 years. And, you know, my motto is hate war, but love the American soldier. And so that's who I am. I'm originally from San Diego. Grew up, I was kind of the Ferris Bueller, if you will. I surfed, played football, was on the ASB, got terrible grades, but had a great time. And, you know, that's who I am.
Nice to meet you.
Thank you.
Nice.
Go ahead, somebody jump in.
I'll go next. I'm Lisa Paragary, and I have been with Sotheby's for about 3 years and have been in the real estate salesperson role for about 23 years. So I've been doing this for a long time. Native Sacramentan. We serve basically our Tri-County area, which is El Dorado, Sacramento, and Placer counties. We working with Sotheby's do some element of the luxury market, and definitely part of our forte there. So we enjoy that. And Steve and I have been partners for about 8 years. I believe we both came from Lyon Real Estate before Sotheby's, but Sotheby's has been a terrific shift for us and works beautifully with our luxury home model that we really enjoy working with.
Nice.
Oh.
I'll jump in. Hey, I'm Greg Sandler, and so obviously I'm with Fairway. I've been here 3 years. I actually was the first employee for Fairway in Sacramento, and now we're up to 68 teammates. And prior to Fairway, I was with Michael over at Big Valley Mortgage, and then he went to the C-suite over at APM, and that's when I departed Big Valley Mortgage. So it's good to have Michael back over with me at Fairway. It's been awesome, and we're having lots of fun. So I've been in the mortgage biz since 2002, started in the Bay Area, moved to Placer County in 2004, and just love it here. I love the outdoors. Not a golfer, but I have a golf course in my backyard. So that's why I have this picture. So this is not actually my window. That's an actual backdrop. So anyways, so I live, you know, here in Lincoln, and I work in Rockland, and you know, we serve the greater Sacramento area. You know, our primary focus is and always has been the agency programs, but we do get into some non-conforming business every once in a while too. That would be jumbo, but I'm sure we're going to talk about that later, so I won't go into too much detail. got two kids, a 9 and 11-year-old. They're at home. I'm learning how to be a teacher and trying to figure this whole education piece out for my kids. It's really tough, but you know, we're making do. Got a wife too. She's awesome. We've been married for, gosh, going on 14 years, 13 years. It'll be 14 years soon. So.
You're going to need to know that. That's
Yeah, so I know the date. It's May 20th.
It's the anniversary
Okay,
date, man.
good.
You better know it.
The date's coming up. It's May 20th.
All right. All right.
So, but yeah, no, life's good. You know, we're doing really good, even though we're in quarantine. So, but that's who I am.
Well, I'll go next. I'm Steve Miller. As Lisa mentioned, we currently work for Sotheby's. Lisa and I have been long-term friends. We worked together in the title insurance industry before I joined, you know, the real estate ranks. Lisa had been selling real estate for quite a bit of time. Really kind of helped me and formulate my decision to go to Lion. And when I joined Lion, we became teammates there shortly thereafter. And I think it is fantastic to be able to have a teammate that you can have a great time with. But this is such a crazy business that if you didn't have someone that you work with, people probably wouldn't believe some of the stories that you have to tell. So I have a verified witness to some of the crazy goings on that have happened in our real estate ventures. I have a fantastic wife. We've been married almost going on 30 years. Two kids, a 23-year-old and a 21-year-old. And I mean, that's the best part of this job, is having the flexibility with a teammate to spend time with your family, and now even more time than I had expected to spend in quarantine, but enjoying that.
Yeah.
Okay.
Oh, are all of those of you who have adult children, are all your adult children back home with you for this time, or no, they're quarantining in their own spaces? Gotcha.
Yeah, mine's quarantining
in
in
Chicago.
Yeah, mine's in San Diego, Camp Pendleton with the Marines. Yep.
Gotcha.
We're actually
All right.
quarantining with our oldest. We're in Dallas, right? Or outside of Dallas in Fort Worth.
Oh, okay.
Yeah, so that is one of the, you know, kind of launching into the change of business with regards to quarantine. I mean, it does give you the opportunity to be more remote, which is unusual for us. I mean, Lisa and I, we kind of pride ourselves in providing this kind of concierge level service and, you know, being really involved. You know, we typically show our homes specifically, either one of us or one of our team members, rather than have a lockbox. So this is kind of an unorthodox time for us, because regardless of the value of the home, I mean, that's the way that we've been handling our transactions, you know, since we formed our team. And this is just kind of uncharted territory, very, very different way of conducting business for sure.
Yeah.
Yeah, definitely. I mean, that's a perfect segue, Steve. I can imagine. And that was going to be my next question, just for all of you, is given this kind of shift in the limitations and how quickly everybody had to kind of figure out new ways of doing their business. And even then just managing personal lives, I was just going to have everybody go around and say, I like to start with positivity. So finding just one thing that you're grateful for, something that has been kind of neat or new that you have discovered that has come out of this that you're grateful for in the shift, and then something that has been probably challenging about shifting either personal life or professionally in this time. If you want to go around and say both. Steve, you kind of kicked us off with that. If you want to give any additional thoughts, and then we can keep moving around.
Well, I think, you know, my wife is a professional, and we sometimes are running at opposite ends of the spectrum. And being able to have this time to shelter in place has been really great for us. I mean, we both are still conducting business, but it's just in a different way to be able to, and then to add the cherry on top of the Sunday, to be having a family around. I would say that those are probably the most positive things during this, you know, kind of uncharted territory for me.
Yeah.
Yeah, I would second that. Just being able to spend more time with the family has been a pleasant surprise. Although again, I'm having some struggles becoming an educator because I've not done that before. But you know, the thing I'm most grateful for in all of this is, frankly, that we're all still employed, or at least, you know, receiving income. You know, we Michael and I we manage a pretty hefty pipeline, and it's just shocking how many people are, you know, at the tail end of their transaction, be it a refi or a purchase, and then they lose their job. They're on, you know, they're on furlough or they get laid off. It's been devastating to a lot of households, a lot of families, and so personally, I'm very grateful for the opportunity to you know, still have an industry that's deemed essential, and we're still working. You know, we're still able to serve people and you know, get the job done and earn a living. So you know, the biggest I don't know if I'm surprised, but one of the, you know, the largest challenges is just maintaining a mindset of abundance in this time of scarcity. There's a tremendous scarcity right now in the credit markets. I'm sure we'll get into that later too, but so I won't go into that. But you know, so it's hard, you know, when you're leading a team and talking to clients and leading them through this. You know, we have to keep our personal mindset in that of abundance, but there's scarcity all around us, from toilet paper to trillions of dollars, literally. So I think that's been the biggest surprise so far.
One thing that I think has been a big benefit that has come out of this is the COVID protocol for showing homes has really set a guideline that probably should have always been the guideline, with buyers really doing their due diligence about what the property amenities are, the floor plans. We've always been proponents of attaching floor plans and videos and as much material as we could for buyers. And then a buyer would come to the house to look at it and say, oh, I thought this was a 3-bedroom house, but it's only a 2-bedroom house. So I think it is really requiring the buyers know exactly what it is that they're coming to look at, that they are requiring that we have proof of funds, a letter from a lender that's going to table funds. So not just a blanket brokerage letter that, you know, may or may not be financing that is real, because we do often find that the letters we get initially are not really the lenders who are subsequently going to fund the loans, and that they have to sign a special COVID addendum that allows them to enter the property. So you're really eliminating a lot of the looky-loo clients who really had no intention of buying that house, but spend a lot of time with their agent or with us, because we show all of our own listings, that aren't really serious. So the people that are looking right now are serious, ready to buy buyers who have gone through that pre-qualification process that's real, not just a, hey, I've got a buddy who's a mortgage broker who wrote me this phony baloney letter. So I do think that this is what the protocol always should have been, is that the people who are coming to look at our homes, that are especially coming into a home where a family is living, personal items there in the house, that we've really got true buyers coming through to take a look at the home. And so I think that has been a tremendous benefit that has come from this, is that there's a lot less wasted time on everybody's behalf. And the buyers who are buying are solid purchasers that are looking to really make a bona fide purchase, not just cruising through, looking around town, trying to figure out what kind of home they can get in our local market versus the Bay Area, et cetera. These are real buyers that are coming to look. And of course, the downside of that is that we don't have a plethora of people just flooding the areas that are potential later down the road possible buyers that we would be working with. So that is probably a little bit of a negative, is that there's not as much prospecting happening. But I'm not at all upset about the protocol that's put into place, and we're really adhering to it and doing a great job for the homes that we have that have occupants. as well as the homes that are vacant, staged, ready to go. Just providing as much information in advance that we can to those prospective buyers.
Cool. Michael?
First, I want to say, Lisa, thanks. That's a great perspective. I hadn't thought of it that way, and that was going to eliminate a lot of the looky-loos. I mean, that's something to keep in mind. So when we get a referral from a real estate agent for a buyer, that's a solid deal. That's a serious buyer. So I actually writing some notes here, and I think that's something we're going to be passing on to our group, because it's kind of like the holidays. November and December, when people are out shopping during the holidays, they're serious. Right, and they've got motivations there. They want to get in before the holidays, show the house out to the family. It's a little different, but if they're out looking right now, they want to buy, for sure. For sure, that's a great point. So what am I grateful for? I'm grateful my family's healthy. My mom and dad, they're both in that group that would, if they were to come down with COVID, that would be an issue. My dad's 84, my mom's 75, 76, and they're very healthy. All my kids' family is healthy, so I'm grateful for that. Like Greg mentioned, I'm grateful that we're in an industry where we can still go to work. We are deemed important and essential, and so we can go to work and we can continue to earn an income. And we got a little bit of a blessing, with the refinances in January and February. And it was a gift to us because it fed us, through the hard times right now. So we're having exceptional months right now. We think that the Cinderella dance will be done at the end of May. And so we need to get back to work. I think the country needs to get back to work. But, we've been blessed with a lot of work, full pipelines the first 6 weeks of this COVID deal. So we've been blessed with that. The biggest change for me, I'm still going to work every day. I'm almost self-quarantine here. There's nobody here in this big building. So I'm self-quarantined here, but the biggest change for me is, I haven't been able to go to the gym. So how do I stay disciplined about staying healthy? And so the gift out of this whole thing for me is that I've discovered cycling. And so now you can find me on the American River bike path, and I rode 50 miles on Sunday, which I'd never done before. And I've really fallen in love with it. So there's been that's been the gift for me out of this whole thing. In addition to spending time with my kids. I mean, I'm barbecuing almost every single night now when the weather permits, and we're getting to do that. So, I think it's the same for a lot of people. They're rediscovering family time. They're rediscovering what it's like to actually be focused on the kids, because they can be, whether it's schoolwork or whatever it is. But yeah, I think there's gifts and there's awakenings out of this thing that I'm definitely sensing and I'm definitely feeling.
Absolutely. I think it's cool. And I think I've heard a lot of people talking about how it'll be neat to be at the end of this, but able to really be thoughtful about what we take with us, that we have, learned and rediscovered from it. So that's cool. Thanks, you guys, for sharing. I am just going to pass the mic, so to speak, off to Lisa and Steve. I think I tell everybody that I sit down with, both on our partner side and the realtors that we meet, that I am just a connector and enjoy people and telling great stories, but you guys are the experts in your business. So I'm going to let you take it from here and ask Greg and Michael some questions that maybe you guys have been getting from your clients, or that other realtors would find valuable to kind of have that information, and just spend some time doing that. So I'm even going to mute myself and let you just go for it.
Great. I have a question for you, Michael. You mentioned that you're a veteran and love the American Soldier. I know we've gotten some really tremendous new product for VA with lack of loan limitations, et cetera, in 2020. Can you talk a little bit about what that product is looking like right now? Has that been affected at all by COVID? Did that inhibit the new programs that came out? What's the scoop going on with VA loans right now?
So you're talking about the jumbo, correct?
Correct.
Right. So I haven't heard anything that's changed any of that at this point in time tied to COVID. Matter of fact, Ginnie Mae has taken on a lead position as it relates to the secondary market. They actually created a liquidity, what they call liquidity facility, to help with veterans who are going to go into forbearance, and to help the servicers who are actually servicing those loans. So I have not heard, and Greg, you can back me up on this, I haven't heard anything that would change any of the guidelines as it relates to veterans qualifying and using the VA entitlement tied to a jumbo loan. I haven't heard anything on that. Greg, have you heard anything on that?
No, not with respect to loan limits or loan amounts, but the only thing that has come up is a lot of lenders have restricted the debt to income ratios in their automated underwriting systems. So
Yeah.
whereas, just 3 weeks ago, we would have been running automated underwriting and we could get an approval on a VA loan with, a 65% back end debt ratio. Not that we would advise that, but we could. And but now it cuts off at 45.
Wow.
So the debt ratios have been drastically cut in the automated underwriting engines, but the VA guidelines still stand. So if you have a really strong file with compensating factors, for example, a veteran who maybe has 12 months reserves or greater, you could still go with a 63 back end ratio and probably get that loan approved, but it would be a manual VA underwrite or an exception to the tightened down automated systems. Does that make sense?
Yep.
Mm-hmm.
And Michael, you just mentioned furlough on the VA loans. Is that different than, or I'm not furlough, I'm sorry, forbearance.
Forbearance.
Going to be different for a VA loan than it would be for other types of product? I've heard of the forbearance running a variety of different ways. Some of them, they're tacking it on to the very end of the loan. Some of them, they're saying that, hey, you can defer the 2 or 3 months, but then at the end of that third month, it's all due at the same time. So what does that look like on a VA loan for forbearance right now?
Again, haven't heard anything different on a VA loan in terms of forbearance. There's a waterfall, and so they start with stages, and sometimes you get a forbearance plan that will allow you to tack it on to the end of the loan. It depends on, they don't ask you qualification questions, income, they don't do anything like that. So it just depends where you're at. So typically it'll be a 3 to 6 month forbearance. And then once that is over, then they will start to ask the qualifying questions like, what does your income look like? What do your reserves look like? Do you want to do this over a 6 month or a 12-month repayment plan? You can't do that because maybe you're not employed or now you're working at a job where you don't have the income. Let's go ahead and tack it on to the end of the loan. And so if you refi or you sell, then you're going to pay that lump sum at the end. And then the fifth option or the fourth option would be is a loan modification. Let's say that none of the above worked. Now you have to go into a loan modification status or a short sale because you can no longer afford the home. So there hasn't been anything specifically different attached to VA, attached to the forbearance programs.
Okay. And are you seeing this early in the game, people that are already attempting to do a loan modification?
No, not this early. Nope.
I was going to say,
There are people who are applying for forbearance though.
right.
Absolutely.
Yeah.
Okay.
What about on a resale sort of transaction? As I mentioned earlier before Lisa joined the call, we deal with a lot of sellers. And so we're going through the COVID protocol with getting all of the information upfront as far as the desirability, the true desirability that the buyer has in the product that we're offering. What should we be, when we're negotiating through the process, how quickly can loans close these days? I feel that, a bird in the hand, today is a good day, and we're not really sure what tomorrow is going to bring. So what would you advise us as real estate professionals during the negotiation process for our sellers?
Are you going to take that, bud?
Yeah. It's 110% dependent on which loan program they're using. So, being that I'll start with the conforming products. So, and I can't speak for every lender, but I can speak for Fairway. Currently, our turn times are so quick on purchases. We're 48-hour turn time, even given the fact that we're busier than we ever have been before. So that's 48 hours in each milestone for agency programs. When you get into jumbo and non-conforming, all bets are off. So I would advise any agent who is writing an offer with a jumbo loan, minimum 30 days. Conforming loan, we can go 21 days still, but 30-day minimum on a jumbo. I'd go even longer just to set the proper expectation with the caveat of if you can close sooner, then it would be agreeable to do that. We don't want to drag escrows out very, longer than they have to be. But you know, right, there's so much disruption right now in the jumbo non-conforming space that guidelines are changing every day, and investors are coming in the market, pulling out of the market. It's pretty wild. So I would just be very careful with jumbo financing. Try to keep it to, you know, at least today, and this is probably true for the next 3 weeks, keep it to FDIC funded deals. So that's your Wells, your Chase, Bank of America, as an example, or even a credit union deal. Those deals are still funding relatively without a hitch, but it's the Wall Street non-FDIC programs. Those are the ones that are having most of the problems.
Okay.
So those are the stories that we're hearing, that, and we had one specifically also, that everyone had signed loan documents and sellers had signed papers and we were waiting for funds, and investor just pulled the funding. So even though the docs were drawn, it was ready to go. So those are the types of products that you're talking about, is anything that is not coming directly from FDA.
Yeah, so not knowing anything about that transaction, but everything that we used to call non-QM, non-qualified mortgage, that was also non-conforming, those loans are completely gone. They're not even available anymore. So every single one of those investors has, at the very least, stopped funding loans, and some of them, unfortunately, were at the closing table. But you know, even with someone, you know, just a standard, you know, a paper jumbo buyer, you know, who was chasing an interest rate that was available with, you know, a non-FDIC product, you know, because it was a syndicated product from Wall Street, you know, those are risky loans. You know, don't chase a rate just to get yourself into a heap of trouble at the closing table. Just take the bird in the hand, you know, at least today.
Got it.
If I can add to that too, I think since you guys are doing a lot of listings, I think it's important to share with you that the biggest change for us right now is how we look at the feasibility of continued employment. So they look at the type of job. Is it seasonal? Is it not seasonal? And the example our CEO always uses is, you got a guy who plays professional football. Well, if we don't come back in the fall for professional football, is he gainfully employed, right? Whereas you may have somebody who's doesn't have such a glamorous job, doesn't have a great FICO score, but he's got 12 months of reserves, right? Who would you rather give that loan to? So there's going to be a lot of subjectivity. The verification of employment, this is another important thing too, is really vitally important right now. So there's a process where 7 days prior to the loan supposedly funding, there'll be a verification of employment that occurs. And then there's the one the day of that also occurs. And if that borrower, for whatever reason, if there's a skip in their employment, or if they skip a beat, that loan's not going to fund. So it's not done until it's done. And then there's going to be some auditing of those files by the servicer, who may, within the next 30 to 45 days before they move that loan off their line, they may do some random checks to make sure that borrower is still employed as well. And so there's being employed, and the type of job you have right now is really, really, really important. Really important. So that's important when you're talking to your sellers and you get into a deal with somebody. Self-employed borrowers proving their income and their you know, the question has been, if they're deemed important and essential, does that guarantee that we're going to do a loan for them? No, it doesn't. Really, the bigger question is right now, as we're moving through this wave, is, does COVID have an adverse effect on their ability to go out and create an income, or to maintain their income, especially if they're self-employed? Here's kind of a random example, but we had one of our guys, we have a branch up in Arcata, and he was working with somebody who is a oyster farmer, if you will. He takes the oysters, you know, he grows them and he sells them to another farmer, who then sells them to a retailer. And so the question from underwriting was, well, does COVID impact his ability to go out and earn an income? Even though we had a 50% debt to income ratio, we had a 740 FICO score, we had $150,000 in reserves in the bank. What they want to know is, does COVID have an impact on him, on his ability to go out and create an income? And so we had to get a CPA letter, and then he had to write a letter of explanation how he has limited contact with people in his work. He's on a boat most of the time, and. So some borrowers, depending on what they do for a living, are required to jump through more hoops and to prove the fact that the COVID at this point in time is not going to have a negative impact on their ability to have an income.
Makes sense.
In the lending world, we're calling this now COVID proofing your files.
Yeah, exactly.
So a good loan officer should be thinking 10 steps ahead of the underwriter on this, and really painting the picture on any self-employed borrower. You know, this is all work that's done on day one, not when the underwriter asks for it anymore. We now have several weeks of examples of this. So, you know, it's sorry, there's folks talking. But you know, we're definitely far enough along here that we know what's coming at this point. So all loan officers should be getting all of that documentation way ahead of time now.
Got it.
So from a real estate agent's perspective, if we receive an offer on a home, this is a brand new question that I never really thought to ask before. Are we legally allowed to ask what people do for a living when we receive an offer?
So that's tough. So I've had listing agents send me offers with their lender letters, and I'm not asking the buyer because it's none of my business to be calling a buyer or the buyer's agent. I call the lender, and I call the lender directly, and I just have a discussion, and I say, hey, you know, what's the employment? What can you tell me? How is this person going to fund, given everything that we know about, you know, furloughs and forbearances and all this stuff that's coming down the pipe with COVID. So I've been having direct conversations with the lenders, and some are very, you know, forthcoming with information. Others are tight-lipped, and then you have to go back to the listing agent or the buyer's agent, and then have that buyer authorize the lender to speak with either the listing agent or the listing agent's lender. But it is time to ask tough questions. You have a fiduciary responsibility to your seller to not get them in a predicament. So you know, you're doing what you need to do to save your seller, you know, 3 to 4 weeks in a failed escrow.
Right.
Right. I was just wondering about the legality of that, if that somehow breaks some confidentiality
I think
on the part of.
The authorization is a great idea because that kind of removes that from being the issue.
What was that?
The fact that you had mentioned about getting the authorization would allow for that question.
Sure. Yeah.
It is a tough spot to be in, though. You guys are in a tough spot to protect your seller because, again, the lender may not be honest with you when you ask those questions. And that's the tough part.
Yeah. We would hope they're honest.
We would hope.
It's amazing what we run across.
Oh, I'm sure.
Yeah, I'm sure.
Well, yeah, do you have any other questions? I don't want to cut you off too soon, so feel free.
I don't have any other questions at this time. I think it's pretty straightforward with regard to jumbo that you need to be cautious and make sure that it's an FDIC insured bank, and that makes a lot of sense. And since we do deal a lot with jumbo product, that is significant that we'll be watching out for.
Yeah, well, I'll add to that though. So you know, even mortgage bankers do affiliate with FDIC banks. So for example, Fairway, we have relationships with FDICs, both credit unions and traditional depository banks. And so you have to not only ask, you know, the loan officer what company they work for, but just because the name on their business card doesn't, you know, says something other than Wells, Chase, or B of A, they may still be directing the loan to one of those FDICs.
And how do we guarantee that that's what's happening? Because right now we're being told that we should be receiving that pre-qualification letter with the specifics about what bank. Is that something we just, on the pre-qualification or pre-approval letter, it should be stating now what bank it is being run through? Do you guys know that at that early stage, what bank you're going to put it through?
we absolutely, any loan officer would absolutely know what bank they're going to if it's a jumbo today.
If it's a jumbo, yeah.
If it's an agency product, like agency high balance, that could be going to either Fannie Mae or Freddie Mac, but that doesn't matter because it's all controlled in-house, fully delegated. And any large independent mortgage banker like Fairway, we sell directly to Fannie and Freddie and Ginnie Mae, so we can make moves nobody would ever know on the back end in secondary and dictate which agency we sold the loan to, after we close the loan. That has no bearing on the transaction. So it could go Fannie or Freddie. But yeah, when you're talking anything, that's a jumbo or non-conforming loan today, get as much detail as possible. And just, I encourage you to get a relationship with the loan officer. Information is good, and just because there's a hiccup on a loan, it doesn't mean that the deal's going to go south. It might mean you need 2 extra days. It might mean that we need a little bit more information in order to achieve the goal, but it'll still close. So just, a lot of loan officers are scared to talk to listing agents. They just are. So they're really scared of you guys. Not you personally, just listing agents.
Don't know why, but they are.
Yeah. So that's the one thing that as a manager we run into all the time is, just pick up the phone and talk to the agent. Why haven't you called the agent? Well, last time I called her, she yelled at me, Well, okay.
Yeah.
So, just try to develop that relationship, and then they'll tell you everything that you need to know.
I actually have a question for you.
I appreciate it.
So Lisa, this is off of the lending industry, but I shared this with Katie about Lake Tahoe. And do you guys still have a place up there in Lake Tahoe on the West Shore with, in partnership with the Mark Steins, a house?
So that's my dad, Randy, and no, they don't.
They don't. Okay. And the reason why I knew that is because my dad's cousin, about 15 years ago, bought a house. It was right next door to that. And he had mentioned that the Mark Steins and the Paragarys owned a house next to his second home, obviously. But so I didn't know if that was you guys or not.
Yeah, they actually sold that probably, oh gosh, I don't know, 6 or 7 years ago to the Saka family.
Okay.
So they haven't owned that in quite a while.
Quite a long time. Okay. All right. Yeah. Nice area.
Yeah, beautiful.
Yeah, for sure.
All right, that's a perfect shift. We're going to go into just kind of how I've been wrapping these meetings. We are jokingly calling it a quick 6, and I didn't tell any of you the questions I was going to be asking. They're very much just what's, first thing that comes to mind. They're very easy questions, so don't overthink it. And just giving us a little peek into what's, floating around in your brain during this quarantined time. So we'll go Michael, Steve, Greg, Lisa in a kind of rapid fire fashion. You can just answer, first thing that you think of. But first of all,
not fair, Katie, not fair.
It's okay. These are very, very painless, I promise. I'm not asking you to reveal deep, dark secrets. Well, maybe the first one. This might be a little window into your soul, but all right. So we're all quarantined right now and there's extra TV time. What have you been binge watching, rewatching, or, guilty pleasure on the television? I know I put you first, Michael. Sorry.
Michael, you're first.
Oh, you did? Oh, I'm
Yeah,
first?
I did. We're going Michael, Steve, Greg, Lisa.
Okay, I've been binge watching the Formula One series on Netflix, the documentary.
Formula One. Okay.
That is probably a little more intellectual than my selection, which is Schitt's Creek.
Schitt's Creek.
My whole family loves that show. It's hysterical.
What is that?
It's a kind of fish out of water, comedy. It's to me, it's senseless, just good fun.
Got it.
It's comedy gold. It's so good.
Really? Oh, you're watching it too. Okay.
Yeah.
My wife was watching that yesterday.
Schitt's Creek. I've never even heard of it.
So yeah, I can't even say that I've had time to binge watch, certainly not personally. So, but I've been with my kids and we just like to laugh a lot. So actually it's America's Funniest Home Videos. So
That's good family fun.
it is.
I like it.
So mine is Unorthodox on Netflix. I just wrapped that up. It's only 4 episodes, an hour each. Super interesting, far better. It just kept showing up on my Netflix screen and I thought, I'll give it a shot. It's great. It's far better than I expected. And storyline, I had no idea what it was about. It's very interesting.
Awesome. All right, so we're all dreaming of being able to get out of our own counties. First place you want to leave and go to, are you beach or mountains? What's floating around in your brain? Or
Back to me
something
again?
in between. Mhm.
Both. I want to do both, actually. I want to go to the mountains and I want to go to the beach. So both.
Beach for me.
Beach for
Beach
you,
is good.
okay.
So I actually went back and forth to Mexico. I was in Mexico when this whole thing started, and I flew back from a wonderful vacation in Mexico 2 or 3 days before they shut down the border. So I was just at the beach, and I really want to snowboard. I don't think I'm going to be able to snow. I don't think the ski resorts are going to be open at all this year. But I haven't even touched the snow yet. So I'd love to get the family in the car and head up the hill. So.
Nice.
And we have a house in North Star that we haven't been to since summer. So I think we have to go check that out. And then we have a beach vacation scheduled in July and hopefully that's going to happen. Trip to Hawaii. Who knows? I mean, we're anticipating that Hawaii will be back open by July, but you just don't know.
Did you buy those tickets after COVID or before COVID?
Before.
Before.
And the price has not gotten cheaper. I keep checking back in and we bought it on a spring sale when we bought it and the ticket price has not gone down since I purchased it.
Really?
Interesting.
I thought they would. Wow.
Yeah.
Wow. Okay.
Not for
All
July.
right.
It might as we get closer to July, but not that far out. They're not willing to gamble on making it any cheaper than it was. So
Yeah. It's a gamble for sure.
Okay, first restaurant that you are looking forward to being able to eat at, not just take out from, but the ambiance. What restaurant are you excited to be able to go back to?
Just because it's right by the house, Paul Martin's.
That's a good one.
Yep.
My family likes Chicago Fire, but they always say it's just not as good to get it to go as it is there. So I probably would say Chicago Fire.
Okay.
I'm voting for Lazy Dog. I hope they make it. We moved about a year ago, and I promised my kids that if they let us move to the house that my wife and I wanted, which was obviously off the street where all their friends were, that I would get them a puppy. So we got this puppy. Her name's Hannah, and we just finally got to the point where we got to take her to Lazy Dog, and it was so much fun. And so we really just want to go back.
mine is Out of Bounds in Folsom. Nothing that I like better than taking a long bike ride around the American River bike trail and then ending it Out of Bounds and having fun outdoor dining. Looking
There
forward
you
to
go.
I haven't tried that one yet.
How often do you ride, Lisa?
We usually ride about 20 miles.
Okay. I'm heading there right after this, actually.
Have fun. It's a beautiful day out there.
I know. It's awesome.
Okay, so Michael, I already know your answer to this one because you answered it earlier, but favorite form of exercise right now in the midst of the quarantine?
Bicycling for sure.
We've been taking long walks. We live near here in Fort Worth. We live near a river, and so we walk along the river every day. I mean, it's like the highlight of our day.
Nice.
I've been enjoying walking through our neighborhood with our family and my dog. so in fact, that's where this picture came from, the background. So yeah, I'm just really enjoying walking.
I think anything outside right now is my favorite form of exercise. Anything I can do outdoors. But I mean, anything you'd ever want to do online is available and free. So I've been trying lots of different unique workouts that I hadn't tried before.
Totally.
But we have time.
Yeah, it's nice. Okay, worst household chore that you're having to do for yourself now in the house that maybe you used to be able to have someone else do for you?
I don't know if it's necessarily me. It's getting, and I think we talked about this, Katie. It's getting my 15-year-old son who's at the house permanently right now. Getting him to do the chores while I'm not there. That's probably the hardest thing.
I mean, I've washed dishes plenty of times and laundry, but I mean, man, it feels like that's a pretty common occurrence. Yeah, I've seen those. Somebody would say that the masks should be used inside, to keep you from going to the refrigerator. And I would definitely say that is something that I should take up. Put the mask on inside.
Totally.
I haven't taken on any new household chores except for becoming an educator. So, but I don't think that's what you're talking about. So
hey, whatever. That's true too.
It is what it is.
And I would say cooking absolutely every single meal is wearing a little thin, but I'll keep doing it.
Paragary isn't doing takeout?
No takeout.
No takeout.
No
Okay.
takeout. Wow.
Yeah.
No
Takeout.
All right. Last quick one here is last book you read or listened to if you're more of an Audible person.
Where's it at? This one right here. This is the last book I read right there. Story Brand.
Cool.
Yeah. It's a good book if you want to know your why and what your brand's all about.
Cool.
We were listening to a podcast. My daughter, my youngest, loves The Office, the sitcom, and it was really interesting. They kind of did a deep dive behind. There were more things than I cared to even know about The Office, but I found it to be interesting.
Cool.
Yeah. So that book, Story Brand, is floating around the office right now. That was the last book that I read.
Cool.
Mine is Case for Christ by Lee Strobel. It's a fascinating book. Love it. I'm on like the last chapter of it right now. It's one of the best books I've ever read.
Awesome.
I read that one in college, Lisa. That's a really good one. I should probably revisit it though.
Yeah.
That's good.
The Case for Creator is next on my list, which I've heard is also fantastic. So it takes a kind of a reporter and a lead investigator, he's an attorney, view at literally the case for Jesus Christ, and just the factual accounting is fascinating. The history behind it and the actual interviews with historians, et cetera, it's an incredibly fascinating read, whether you're interested in Christ or just generally history. It's a good one.
Cool.
Good stuff.
Well, thanks you guys for being good sports with that. We're just going to wrap with one final question that I did send out in the agenda, but just so maybe you've had a chance to think about it. You can take it seriously or you can be totally silly, but I feel like with everybody a little bit more isolated these days, it's fun to ask what in the world is, like I phrased it, saving your life right now. Just ways that you're something that's keeping you sane, helping you keep perspective, healthy, either whether that be mentally, emotionally, or physically, but what is saving your life right now?
Gosh, you know what? I've kept my same schedule. So I still go to bed fairly early. I get up early. I do all my daily disciplines. I still come to the office. The two things that have changed, I mentioned one, which is the gym. Can't go to the gym anymore. Can't go to Lifetime and work out. But that's a gift because now I'm doing the cycling. And the other big change is that I can't walk in to my favorite Starbucks and talk to the baristas and the locals and there's a group that has been going into the Starbucks there on East Roosevelt for years. And so it's kind of a nice gathering place and to meet up with people and catch up. And so I miss that a lot. But everything else, with the exception of going to the gym, I've been trying to maintain that focus and keep those daily disciplines, which has been keeping me on track.
Cool.
For me, I think really, I mean, I've mentioned it several times. I think just interacting with my family, being able to have us together, at least for a short period of time, has been really great. And I think that completely keeps me sane, and I think it keeps me in perspective of what's really, really important, and that's just our health and safety above all else. And everything else will work itself out in due time.
Good.
The sunny days, just sitting in my backyard with, you know, when it's not raining, with or without kids and wife, you know, it's just, it's serenity. So that's why we moved to where we're at. And, you know, I just love detoxing back there. So that's what keeps me sane.
I get his pictures of sunsets, trust me.
Yeah.
For me, it's been Zoom. I
Oh, there you go.
used Zoom
Yeah.
before. I knew nothing about Zoom. It wasn't something that I thought I would live my life doing, but we have had cocktail parties, dinner parties, game nights with other families, Zoom Bible study, Zoom book club, Zoom office meeting. I've never attended more office meetings with Sotheby's. I mean, it was not something that I ever drove physically to the office to attend an office meeting. I have weighed in on darn near every office meeting we've had, every agent, top producer round table, every referral group. I don't care if I ever go into the office again as long as I live, because Zoom. It's awesome.
Yeah. Actually, I love Zoom too now. I really do. I enjoy it.
Why not?
Yeah, it's great. It's great.
I totally agree. I think it actually makes us highly efficient because we don't have to do all of the extra
Very.
time driving that would keep us away from things. But it has helped me feel connected to humanity, friends, family, coworkers. So yeah. Well, thanks you guys. That is it for kind of our official time. I appreciate you all weighing in and just letting us kind of meet and peek into each other's lives. So
Cool.
I'm going to stop recording now.
Thanks,
Okay.
Katie.
Thank you.